The S&P 500 very, very close to the year's lows, and the strong dollar this year, Kailey Leinz, has not helped.
Strong and continually getting stronger. I mean, all hail King Dollar, John. It seems to be the only thing anyone wants to buy right now, up against everything in G10, as you said, as there is a narrative that hawkish central banks, specifically the Federal Reserve, particularly the Federal Reserve, are going to keep supporting this dollar, while other central banks hiking cannot do enough to support their currencies. Just look at the euro or the pound for an example of that. And this seems to be the narrative that this isn't going to change anytime soon, that there isn't much standing in the way right now of dollar strength. Obviously, that has big ripple effects, including for stocks, especially those big multinationals that have significant exposure overseas, because the value of the sales made elsewhere is worth a lot less when it has to be converted back into dollars. So those FX headwinds are quite large, and that is something that Mike Wilson over at Morgan Stanley pointed out in research this morning, saying that by his calculations, every 1% change in the dollar index has a negative 0.5% impact on profit. So he said fourth quarter S&P earnings will face an approximate 10% headwind from the stronger currency. That may help explain why S&P companies with low international sales are outperforming those with high international sales, which is that blue line we're looking at here on this chart. Of course, the currency impact is felt in other classes, asset classes as well, including commodities, because those priced in dollars are more expensive for overseas buyers. So that, coupled with demand concerns around a deteriorating growth outlook, has dragged hard on the likes of the metals, with copper down about 30% over the last 6 months, gold down about 16%, and of course crude sub $80 on WTI. We are at the lowest levels since January, John.
Kailey, awesome work this morning, as always. Kailey Leinz there. Want to pick up on that quote that Kailey just used from Mike Wilson and Morgan Stanley. If you want the numbers again, I'm happy to share them with you. On a year-over-year basis, the dollar index is now up 21% and still rising. Based on our analysis, that every 1% change in the DXY has around a negative 0.5% impact on S&P 500 earnings. As Kailey said, fourth quarter S&P 500 earnings will face an approximate 10% headwind to growth, all else being equal. Morgan Stanley's Mike Wilson.